how do we present this? Now, this is the basic concept of other comprehensive income. I want to quickly discuss with you few provisions around OCI which are required for presentation in the financial statement. So these line items are required to be presented as under two groups. One is reclassified subsequently through P&L out of this 5 items, and you'll have to make two groups. These items will be classified through P&L and will not be classified through P&L. Now this is a little bit confusing again, but now let's understand first. You have understood the concept of OCI, and then we'll move on to the second concept here, how to present this in the statement of other comprehensive income. So other comprehensive income and P&L, the difference is P&L is transactional gains and losses, other comprehensive is non-transactional value changes, both gains and losses. Okay, these are the 5 line items are example. So mostly only this. How to present this in the P&L? I'll show you this. Statement of P&L and other comprehensive income. The first part is the items of P&L here, and the second is items of OCI. So there is an option as given by IS 1. You can present two different statements or one single statement. So I have used and presented with the second option. You can present one single statement. First, revenue, items of P&L, and second, items of other comprehensive income. Now first is revenue. After giving all the expenses etc., you will have this amount as total profit after tax, which is highlighted in yellow here, and then comes the items of OCI. I have considered only a couple of line items right now. One is revaluation reserve, second is FCTR. Okay. Now, revaluation reserve and FCTR, where this goes, my total comprehensive income, if you see, my total comprehensive income is this. This is a total comprehensive income. From P&L and OCI, where it goes to, or it gets transferred to balance sheet via SOCI, statement of changes in equity. So I have statement of changes in equity drawn up here. The first portion, if you see, this is my reserves and surpluses. So items of P&L will be classified here, and second is my items of OCI. So items of OCI will be transferred to here. So let's say if there is a revaluation reserve, there is a FCTR during the year, it will be total amount, it will be transferred here. So FCTR in the FCTR column, revaluation reserve in revaluation reserve column, etc. It will be carried forward to subsequent year, the total one. Correct? So SOCI provides you reconciliation of this equity items. All your P&L related items and all your OCI related items, accumulated balances, changes during the year, and then closing balance. This information for the previous year and same will be presented for the current year. So this provides you the reconciliation of your total equity, SOCI. I have not included share capital by reason. Otherwise, share capital will also be part of the SOCI itself. Okay. Now, once the items of that profit after tax will be from P&L, it will be transferred to retained earnings or accumulated balances in profit and loss account in the yellow item, changes during the period, and items of OCI will be transferred here in the changes during the period in the respective column. Now what we need to do is, and this total, ultimately, this total gets transferred as a part of this balance sheet in other equity. Alright. In other equity, this line item goes. This closing balance, of course, the closing balance will go as on date. That will go to the other equity. Not this one. So this is the movement of these line items. P&L OCI will get transferred to SOCI. From SOCI, this total equity, considering the opening balance, changes during the year, it will go to the other equity in balance sheet, equity and liability side. All right. The point is, sometime in the entire life of that asset or liability, there will be a transaction with respect to that asset. Am I right? Now, a bifurcation between P&L and OCI, the basis which we have mentioned or discussed is transactional, non-transactional. But at some point of time, there will be a transaction. Am I right? You will sell off that asset, property, plant and equipment at some point of time. That subsidiary will be sold at some point of time in life of that entire entity. So the gains and losses which you have accumulated under other comprehensive income, those will be sometimes transactional. It will not always be non-transactional value changes. Sometime in lifetime of that asset or that investment, it will be transactional. I'm not saying realized or unrealized, okay? It will be transactional. You will sell off that PPE, you will sell off that investment, and once you will sell it, that will be a transactional gain and loss. Such non-transactional gains upon occurrence of the transaction will become transactional gain or loss. Am I right? Now this transactional gain or loss needs to be presented now in P&L because it's transactional. It can't be in OCI anymore. So you will have to classify this sometimes. But then, as I said, standard says few of the line items will be classified to P&L and some will not be classified to P&L at any point of time. Even if transaction happens, okay? Even if transaction happens, some items will never be classified to P&L. Some items will be classified through P&L. So what does it mean here? So in this case, out of these two items, so we have seen there are total 5 line items. Few will be transferred to P&L, few will not be transferred to P&L. So here, upon happening of transaction, let's say revaluation reserve, this will never be transferred to P&L at any point of time. So this revaluation reserve will directly be transferred to retained earnings, not through P&L, directly in SOCI from one column revaluation reserve to the retained earning column. So this will not be classified to P&L at any point of time. Second, FCTR. This line item, it will be transferred to P&L. So I've given you 2 examples. So like that, all these 5 items has been given by the standard which will be classified through P&L, which will not be reclassified through P&L. So this you will have to learn from respective standard, not this accounting standard. So I've given you a couple of examples, but ideally this has been given in the respective standard. Which respective standards? Revaluation reserve 16, IS 16, remeasurements, actual gains and losses, that it has been given under IS 19, so on and so forth. So this is the presentation which is required for all these 5 line items. This is the presentation which is required for all the line items. With respect to these line items, there could be effect of income taxes, that is deferred taxes or income taxes actually. Those income taxes may be presented as a part of that line item itself, and that is net, or it could be presented gross. But those will be presented in the section other comprehensive income. It will be either presented gross or net. So line item gross, its income tax effect will be presented separately, the tax effect, or it could be presented net. All right, so this is the presentation. How do you present it in the balance sheet? This is the concept of other comprehensive income and how it is to be presented. If you have liked the video, please like it and share it. Do subscribe to our YouTube channel FinPro Consulting. Thank you so much.